been early on what Bitcoin represents on the other side of AI, which is that like if we believe high compute is important, that is a currency. And obviously high compute is important. Like that is not a controversial statement anymore. And Bitcoin doesn't need to take an ideological view on how AI is expressed either, right? It doesn't actually have to take the ethical concerns of AI into the conversation because Bitcoin is not about having an ethical view. But what it does recognize is it's a store of energy for which high compute is considered important. And so all of these three like pillars that are coming together to me represents value. It's a little bit counterintuitive, but I think when you introspect deeply and understand that's what people want to own in their portfolio, that's valuable to them, I don't think there's any asset better than Bitcoin in the world.
Institutional money is only beginning to touch Bitcoin, and the scale is still surprisingly small. Jeff Park, partner and chief investing officer at ProCap BTC, points out that roughly 10% of Bitcoin is in the hands of institutions, mainly governments and public companies. But here's the key, just over 100 entities account for about 7% of that total. The concentration shows how early adoption really is, and how much space remains for new players to enter. Most of the attention so far has gone to the Bitcoin Treasury model, made famous by Michael Saylor and MicroStrategy. Put Bitcoin on the balance sheet and hold it as a reserve asset. Park believes the next wave could look very different. He suggests that instead of simply holding coins, companies could structure their operations to actively generate Bitcoin. If Bitcoin becomes the accounting unit for balance sheets, then growing revenue means stacking more Bitcoin directly. That changes the incentive structure and creates a stronger flywheel. Park compares it to a Berkshire Hathaway-style approach. Imagine businesses, customers, and investors all linked through a shared Bitcoin framework. As each layer grows, the value compounds across the entire network. It's not just a balance sheet hedge anymore, it's an operating system for how companies create and measure value. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
I think I saw recently that about 10% of Bitcoin is actually now held by institutions. These are governments and public companies for the most part. And when you double click on it, what's actually more fascinating is that there's only like 115 entities or so that constitutes the top 7%. So it's actually early in terms of the counts of institutions relative to the ownership of the Bitcoin network, which signals something. There's still a lot of opportunity for more companies to come online and buy Bitcoin. But what companies will then do with them will be really different going forward. I think we're used to thinking about the Bitcoin Treasury company by the way Saylor has defined it as kind of the de facto base case. But I think that's one version of it. And I think there's things to appreciate there about the possibilities of financializing Bitcoin exposure for the institutional investor. And it's been wildly successful. But that's not really the kind of embodiment at the core of like making Bitcoin in itself more productively useful for the actual gains to be had for society, right? And so the thing that keeps me up a little bit at night with a lot of excitement and a lot of ability to think about what synergies could exist out of Bitcoin is not just Bitcoin accumulation. Of course, acquiring Bitcoin per share is the driving metric for which people will be enthused today. But a close cousin of that is operating revenue that can then also acquire Bitcoin more creatively on the balance sheet, right? So if you can just determine Bitcoin as the unit of account for which you want your valuation of the balance sheet to exist, then the goal is to actually generate revenue to increase the balance sheet in itself. And the nice thing about Bitcoin as an ideology is that if it works, you can basically reduce what is one of the highest cost center of any operating business, which is customer acquisition. Most of the businesses spend an inordinate amount of money on marketing, on distribution, and all the ways. I mean, even the case with how Coinbase and Circle, right, is set up in their JV for USDC shows you the power Coinbase has over Circle in the take rate. So distribution is everything. But the nice thing is, if you're a Bitcoin Treasury Co. that can earn the goodwill of your customers being your shareholders who are ideologically aligned for Bitcoin adjacent businesses, you can attack that vector in a very cost efficient way. right? That gives you an unfair advantage. That gives you a chance to acquire different kinds of businesses or build different kinds of businesses where only you can actually exercise that premium as your customers, then therefore being your shareholders. And I think that is really what I think about a lot when the idea of the Berkshire Hathaway of Bitcoin coming to be, which is the synergy that arises out of that network effect of having your shareholders also being your customers to potentially the businesses that they're also invested in.
Jeff Park argues that people get value investing wrong because they think too narrowly. In most discussions, value is reduced to buying a cheap stock or a company trading below intrinsic worth. But Park says the meaning is much deeper than that. At its core, value is what you're willing to hold firmly, what you believe in regardless of shifting narratives. Benjamin Graham's approach was one version of it, rooted in fundamentals and balance sheets, but it was still only an interpretation. From Park's perspective, Bitcoin represents the highest expression of value with a capital V. Unlike traditional assets, it's censorship resistant. No government, tariff, or political decree can alter its supply or dictate who can use it. That independence makes it fundamentally different from every fiat currency or stock that exists within the bounds of regulation. Beyond the mechanics, Park points to Bitcoin's cultural force. It unites people across ideologies and geographies, providing a common belief system in an era when divisions run deep. That shared conviction is powerful because it spreads organically, outside government mandates or corporate marketing. For Park, this combination, scarcity, independence, and global adoption, makes Bitcoin the purest form of value investing available today. Let's get back to the interview.
I think the greatest kind of misgiving and misconception about value investing is that value is defined incorrectly. I mean, the literal definition of value in the dictionary doesn't say cheap stock, right? It actually is something you hold dearly in your heart as a way to portray a belief. That's what a value is. So Benjamin Graham's version of value investing is one version of it, but the definitional aspect of value means it can transcend that to what other people want it to be. And that's why I make this case that Bitcoin is the ultimate value. It's a capital V value because the ideological pillars of being censorship resistant, where it's not at the whims of these geopolitical orders and tariffs and all these things, it's above that. It's also, I think, culturally very unifying, despite the fact that there's these chasms that we're seeing in society where the ideology is pretty pervasive at a global level. And then even on the front of technology, I actually do think many of you and us, like we've been early on what Bitcoin represents on the other side of AI, which is that like if we believe high compute is important, that is a currency. And obviously high compute is important. Like that is not a controversial statement anymore. And Bitcoin doesn't need to take an ideological view on how AI is expressed either, right? It doesn't actually have to take the ethical concerns of AI into the conversation because Bitcoin is not about having an ethical view. But what it does recognize is it's a store of energy for which high compute is considered important. And so all of these three like pillars that are coming together to me represents value. It's a little bit counterintuitive, but I think when you introspect deeply and understand that's what people want to own in their portfolio, that's valuable to them, I don't think there's any asset better than Bitcoin in the world. I think this is the incredible mental incongruence about what financial nihilism can look like to outsiders and to those that are on the inside, which is actually, there's a very optimistic version of this too. When you have kind of the global concerns around income inequality that is just so pervasive, right? It's present everywhere. This is not even an American story. This is everywhere in the world. The number one issue is income inequality. The next generation not being able to afford a home. It's everywhere. And so at that point, what is the rational thing for somebody in that seat to be doing? It's actually recognizing that you have to break the system to give yourself a chance at a fat-tailed event to catch a bid. It's actually a very rational thing to do. And so, some folks may scratch their head and say like, oh my gosh, these people are acting crazy. They're just left tail, right tail on the fringes of being IQ 80 and IQ 150. But guess what? Like all ideologies are IQ 80 or 130. That's the point of having an ideology. If you're 100, you're in the meat of the curve. That's not an ideology. That's just that is what it is.
Existence.
It's just, you're just existing. Right. And so I think once you see that, and and I think a lot of smart kind of business leaders are able to see it. Like that is a form of soft power. And there's actually a great kind of like a primal optimism in that too, which is that it's a case for a survival mechanism that people are navigating. And I think we should be optimistic about this movement.
Bitcoin climbed on Friday, riding the wave of risk on sentiment after U.S. non-farm payrolls came in weaker than expected, reinforcing bets that the Federal Reserve will cut rates in September. Traders welcomed the softer labor data as confirmation that monetary easing is on the horizon, sending risk assets broadly higher. The world's largest cryptocurrency gained more than 4% this week, staging a modest recovery after the sharp sell-off that gripped markets through much of August. While the rebound provided some relief, Bitcoin's price action still reflected a largely range-bound structure, with momentum capped despite improving macro signals. Crypto markets as a whole lagged equities and other risk-driven assets, highlighting lingering caution after August's turbulence. Still, conviction is building that the Fed's next move is lower, which typically favors speculative assets like Bitcoin. Additional support also came from reports of more corporate treasuries adding Bitcoin to their balance sheets and growing optimism around regulatory shifts in the U.S. toward a more supportive framework. For now, though, Bitcoin remains stuck between its recent highs and lows, struggling to break out decisively. The coming weeks, with Fed policy front and center, could determine whether this rebound builds into a larger rally or fades back into consolidation. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support and I hope you enjoy the video.